All right, everyone. Well, for this episode, I have some exciting news. I received an email, which, to be honest, I was expecting. I knew this email was coming because I'd heard the news a few months ago. So the email, it's from Charles Schwab himself. Well, so this is what he has to say. The trade settlement period will be shortening to 1 day on May 28th, 2024. This is great news for small account traders. This is great news for traders who have cash accounts with any broker. Now, this is an email from Charles Schwab, but this is because settlement time has changed across the board. So the way it currently works is if you have an account with any US broker and it is a cash account, it means you can only trade with your cash balance. So if you deposit $1,000 in the account, then on Monday, you could buy, if you wanted, 500 shares of a $2 stock, and you would use the full $1,000 of buying power. Now, if the stock goes up, 20 cents and you make $100, that's awesome. You'll have $1,100 in your account, but on Tuesday when you log in, you'll have zero available buying power. You won't be able to trade because this trade takes 2 days to settle, which is ridiculous. So you would have had to wait, as of right now, till Wednesday. And then on Wednesday, you'll have $1,100 in your account. You could take another trade on Wednesday with the full balance. And then again on Thursday, no buying power, no trades. So you could trade again on Friday. The problem here is that you can really only trade with your available buying power every other day because of the full 2 days of settlement. It doesn't make sense. And obviously, regulators figure that out. And so they've changed settlement period. And they had to work, of course, with the clearing firms and the banks to do this. Now, it's already been the case for a long time with options that options settle overnight. But trading options, as you know, is very risky. Trying to day trade options is extremely risky. The reason is because a lot of options have huge spreads. So an option contract, I mean, we really do see this all the time. You'll see an option contract that's, 350 by 475, something like that. It's a huge spread. And the only reason it's going to go up is if the underlying asset goes up. But getting filled on the ask with options, good luck. It is nearly impossible. The market makers have options dialed down. I mean, they don't leave retail traders like you and me much room for profit. So although options do settle overnight, I don't find them to be safe or easy to trade at all, at least from the perspective of day trading. Now, look, if you're really confident in the longer term direction of a stock and you buy options, you could hold it for a few days, but then overnight settlement doesn't really matter because now it's not even a day trade. So when it comes to day trading, and specifically day trading, the type of fast moving stocks that you'll see me trading on pretty much a daily basis, on Friday, we had this stock Verb, right? So this stock goes up over 400% right here. And if you had even a $1,000 account, even just a $1,000 account, you could have bought 10,000. Well, let's see. You could have bought 1,000 shares of this down here. You could have added another 1,000 shares. You could have made $500 in 1 day on this stock because, well, it went up 400%. You could have done really well if you got into the very bottom. But, well, look, we never time the entry and the exit perfectly. Well, there's always a little bit that we could have done better. But the moral here is that with a small account, because of T2, we've been greatly restricted to how much we could trade. So with T1 settlement, this is what it's going to look like now. All right, so we'll get rid of this. So now with T1, you fund with $1,000. You want to put the whole $1,000 into a trade on Monday morning. Now, just because you're putting the full $1,000, let's say you're buying $1,000 worth of a stock at $1 a share. All right, it goes up to $1.10. You're selling for $100 of profit. Tuesday, you're coming in with $1,100. Let's say you do the same thing. There's another really nice penny stock on Tuesday. So you buy just a few more shares of this at $1 and it goes up to $1.10. Now this day you're up $110, right? So now on Wednesday, now you're coming in and your account is at $12.10. So again, you keep doing this each day. You buy a stock at $1, you sell it at $1.10, and you're just going to make a little bit more, a little bit more. So here you would make $121. Right? So your profit just keeps getting a little bigger, a little bigger, a little bigger as your buying power grows. And this is going to allow you to trade twice as much because the settlement period has been cut in half. So I think this is a big win. Now, I have to say, I've been perplexed about the PDT rule for a long time, the pattern day trader rule. It was enacted on February 27th, I believe, 2001. And it states that you have to maintain a minimum balance of $25,000 in order to day trade. I'm surprised that brokers haven't been petitioning to have this eliminated because the brokers want you trading. You know that. They get paid through the payment for order flow structure. All of the free commission brokers, they want you trading. So the $25,000 PDT minimum, what it means is that if you want to day trade with your account like 100 times in a day, you need to maintain $25,000 minimum balance. And that's not reasonable for a lot of people. Now, for me, I use an offshore broker. Of course, a lot of people end up doing that, but US brokers don't like that. That's less money that they could be making. So I'm surprised they haven't made a push to change the settlement period from T1 to instant. See, that's what would be a game changer. They don't have to give you leverage. Now, a current broker right now, when you apply for a margin account, you're getting a couple of things, right? What do you get with a margin account right now? Number one, with a margin account, you're getting leverage. All right. And they give you 4 times leverage, which means if you deposit $25,000, which is the minimum, you now have $100,000 in buying power, which is really more than you should have. It's more than you need. Number 2, you have settlement margin, which means you can day trade this $25,000 a million times in one day if you want to. I mean, there are traders who are trading hundreds of millions of dollars of stock every single day just by like frantically buying and selling, buying and selling, buying and selling. And the broker loves it because they get paid on every share that you trade. Payment for order flow. So they love it. They're not going to stop you from doing that. So then the third thing you get with a margin account is you get to short stocks, which is fine. But most of the retail brokers don't have great inventory of stocks available to borrow. And so shorting isn't really a big thing. So here's my thought. What I think would be amazing is if they have cash accounts, they have margin accounts. And the difference really is that with a margin account, you get leverage and you can short a stock. But the margin you get with both accounts. You get the margin where the trade will settle instantly. Because if you have $1,000, yeah, why do you have to wait a day for the trade to settle? You should be able to trade with that $1,000 100 times in one day if you want to. I don't understand why you can't. It doesn't make sense. Now, again, this is where, the big regulators came in after the dot-com bubble and said, we want to protect retail traders. We want to protect them from losing their butts in the market. And look, retail traders who are trading on 4 times leverage, there were some people who lost a lot of money during the dot-com bubble. So take away the leverage, but don't take away the ability to trade frequently, because the thing is, that doesn't really make sense to me. Trading frequently, saying you can't trade frequently and be a day trader unless you have $25,000. Well, but you sort of could, because in a cash account, if you trade with small amounts, you could day trade as much as you want. So they're not really stopping day trading, right? They're just kind of slowing it down and making it harder. But the thing that I find interesting here is that for people that find success in day trading, most of them start with small accounts. They start with small accounts because that's what makes the most sense. Now, they eventually get the leverage account, they move up, but when you're starting, you want to start small. So the real issue to me is that with a cash account, you're inhibiting how quickly you can gain experience because you're restricting how frequently you can trade. And if you have only $1,000 and you want to trade it like crazy and you lose it all in a day or 2 days, well, that's on you. And you could do that, I suppose, anyways, even with T2 or T1 settlement. But doesn't it make sense to let people trade if they really want to? So let them get in there, let them trade, let them have that experience. And then don't give them the leverage, which is where they can really make some big mistakes. Don't let them short stocks until they meet that minimum for a margin account, the leverage account, 25,000. That's my 2 cents. That's what I think would make a lot of sense. And you know what? I think the brokers would be in favor of it because I think they would see a lot more people open accounts and trade more frequently in the under $25,000 category, maybe with $5,000, $6,000 accounts. Because the thing is, for a lot of the stocks that I'm trading every day, I don't need a $25,000 account. I don't need $100,000 of buying power. If I want to buy 5,000 shares of Verb at $1 a share, it's a $5,000 position. And this stock could go up to $1.20, $1.50 maybe, and I could make $2,500 on it. So the type of stocks that I'm trading, I don't need all that buying power. The only reason I have it is really because it's required to have at least 25,000. I just don't think it's really necessary. I don't see what it really solves. I don't know. That's just me. I mean, there's a million ways people can lose money. They can lose money, being very reckless with a lot of other things. We know people play the lottery, do scratch tickets, go gambling, do all kinds of things. At least in the market, this is not roulette. At least in the market, if you develop a strategy, you actually can have a path to finding consistency. I don't think that exists with roulette. I don't think that exists with the lottery. Those are totally games of chance, but they're restricted in some ways, but people obviously are able to do it all the time. So I think it's interesting that access to the market in this way is restricted, and that people who might have become great traders are essentially barred because they don't have enough money to be part of the club. It just doesn't seem fair to me. Well, I don't know. That's just my opinion. And I really do think the brokers would agree. I bet Chuck, if we get him on the phone, I bet he would agree. I bet he would say, you know what? Yeah, it's not right. And retail traders should be allowed to trade. After all, it's their money, right? If you want to trade, if you want to be active, if you want to make a go of it, you should be allowed to. Now, the gift of leverage. Now, that's something that it's a gift, but it comes with a great deal of responsibility because you can make some huge mistakes on leverage. So I think that's just where I draw the line. But you know what? If they restricted leverage, if they started to scale back how much leverage they offered, think about this. Think about how much of the market at any time could be propped up with people that own stocks on leverage. So if you start pulling away leverage, you'd be forcing people to sell positions. You start forcing a lot of big investors, hedge funds who use leverage. You start forcing them to sell positions, that's not going to be good. So they're not going to want to take away leverage. They probably want to add leverage. They're not going to want to take it away. But I don't know. I think that there could be different ways to protect retail investors while also giving them the freedom of choice, the freedom to trade if they want to. Again, that's just my 2 cents, but I still think that this is great news for small account traders. So coming May 28th, with a small account, if you got $1,000, you got $5,000, you'll now be able to trade that full cash balance every single day. And that is one step closer to having a trading account. If you have enough money in that account and you can have proof of concept of growing it slowly, you would be able to get to a point where you could take several trades a day and you can effectively be a day trader even with a cash account. Now, that used to be like unthought of. I mean, unheard of. Like there was no way you could be a day trader with a cash account. It just wasn't possible. I mean, you just couldn't trade the money enough. You would just run out of buying power. It used to be the settlement time used to be longer, and then it was 3 days and then 2 days. Now it's 1 day. So next stop, instantaneous settlement. It's just sort of a banking issue, I think. The clearing times, because there's no reason they can't do it. But this came up a little bit during the Robinhood whole fiasco with GameStop, because people were trading and trading and trading, but there were issues where the clearing firm was requiring, I think, Robinhood to put up more, collateral because of all of these trades that needed to settle. So that was part of them being like, we can't let people keep trading. But anyways, who knows? I'm not an expert on that, what it really was like behind the scenes there. Of course, I don't work at any of those firms. But I do know that as an active trader, being able to trade your money more frequently is a good thing. So T1 settlement coming May 28th, 2024. I think this is good news. So anyways, spread the good word. And thank you guys, as always, for tuning in. I hope you hit the thumbs up. I hope you subscribe to the channel for more episodes. This is more of a breaking news episode, but episodes typically on day trading strategy. And I'll remind you, as always, that trading is risky. My results aren't typical. Most traders lose money, so take it slow, manage your risk, and practice always in a simulator before you put real money on the line. All right, I'll see you back here for my next episode real soon.